The U.S. economy is no longer overheated, the Fed Reserve Chairman said yesterday, delivering his semi-annual testimony to the U.S. Congress. Although senators asked Jerome Powell questions about the rate cuts, the head of the central bank not only did not say anything new, but also answered extremely evasively. At the same time, he again mentioned the need for more economic data to make well-grounded policy decisions. Nevertheless, the markets gasped subtle hints in the speech of the Fed chairman that the regulator was still approaching a rate cut. Besides, the policymaker underscored the weakening of business activity and employment, as well as the fact that economic metrics are beginning to move in the right direction. However, given that the market, as usual, has already priced in the September rate cut in the US, the situation for popular assets has changed a little. So, today's speech by Jerome Powell in the House of Representatives will hardly bring anything new. The US Central Bank is looking forward to inflation data, which will be released tomorrow. Thus, the most realistic scenario for the US stock market is stagnation. However, stocks that had been in a sleeping mode for most of the year have perked up amid rising expectations that the monetary easing cycle will begin in September. The S&P 500 index updated its all-time high and today showed further growth, trading in the intraday corridor over 5,574 to 5,590 points. The technical picture in the forex market remains unchanged since crucial data on the US inflation will be released only tomorrow. Until then, the most likely scenario is stagnation. The US dollar index today is hovering within a narrow intraday range of 105 to 105.20. At the same time, the index remains stable above the critical support of 105 points. And this year, investors are trying to determine the moment when inflation will come under the control of central banks. The other thorny issue is when the regulators themselves admit that they control prices and not vice versa. For example, the US inflation report for June, due tomorrow, is also expected to be stable. If consumer prices do not rise and remain at the same level, this may be enough for the Fed to revise its timeline for rate cuts. Such prospects may hurt the US dollar. You can learn more about the impact of economic data on exchange rates in our traders' calendar. For example, today in Japan, data showed that annual wholesale inflation accelerated from 2.6 to 2.9%. Such data cemented market expectations regarding a rate hike by the Bank of Japan in the near future. And this prospect is a positive for the Japanese currency. Before the yen tried to strengthen during the Asian session at about 161.36. However, the wide gap between key policy rates in Japan and the US pushed the dollar-yen pair back up to 161.60. So the US dollar again won its small victory over the alien yen. As for the euro-dollar pair, despite the slowdown in the upward cycle, the single currency remains above 1.0800 for the fifth session in a row. And this indicates bullish sentiment among market participants. If the instrument settles above this line, then the door will be open for a further bullish move of the euro. Moreover, the single currency can test 1.0850 and move higher towards 1.09, and this forecast will be realistic if a possible revision of the Fed's agenda for rate cuts will put pressure on the US dollar. The bearish scenario for the euro-dollar pair will come into play if the euro again drops below 1.08, and the level which in this case will act as a resistance. Oil prices have also gained ground today. In the early Wednesday, crude oil declined due to the mitigation of the effects of a Hurricane Beryl and weak inflation data in China. Reports published today in China showed that consumer demand in the world's largest oil importer went down. Besides, factory inflation measured by the producer price index slowed down its fall to minus 0.8% on a year, and this trend indicates a deflation, a fall in production and a consumption level. Despite reports from the American Petroleum Institute on a contraction in the U.S. oil inventories by 1.9 million barrels, oil prices extended the slide. The correction in oil prices escalated so much that the asset sank below $85 a barrel. All in all, the Brent crude has plunged by more than 4.5%, but even such a significant drop still fits into the overall bullish trend. Investors are waiting for similar data from the U.S. Department of Energy. The official report is also expected to show reduction. Consequently, the current decline in oil prices is purely speculative. On the eve of significant economic data, the market often moves in the opposite direction from expectations. Apparently, this is exactly what we are seeing now. If today's data shows a decrease in U.S. oil inventories, the market will sharply turn upward. You have watched the roundup of the global financial markets for today, July 10. Keep close tabs on the global markets on the InstaTraders TV channel. Feel free to leave your comments. Our experts are always ready to answer all your questions. Thank you for watching and see you online tomorrow.